Okay, so hi all. I think we can just get started with the webinar as of now. So, a very good morning, everyone. Thank you so much for joining us today for this exclusive webinar on understanding the new labor codes. I'm Rahul, and I'll be your moderator for the next 60 minutes. So, we are really happy to have a diverse audience here with us who are HR finance professionals, legal professionals, business owners, employers, employees, and even some students, all who are eager to understand how these changes will impact the workplace across India. So before we begin, just a few housekeeping points to ensure a smooth experience for all of us. First of all, the microphones of all the participants have been muted to maintain decorum and to avoid any unnecessary interruptions during the webinar. And also, don't worry about your questions. We know that many of you have had a lot of queries regarding the new labor codes. So our team at Legal Bright have put together an extensive FAQ covering the most common questions you have received. So we'll be addressing all of those questions towards the end of the session. So stay tuned. Next slide, please. Okay. Before we proceed any further, a quick disclaimer. This webinar is intended to help organizations understand the actions that they may need to take when the new changes roll out. And just to clarify, we are not a legal firm, so the information shared should not be viewed as legal advice. Yeah. Now, I'll just be giving you a small intro about our organization. Legal Bright Business Solutions LLP is led by seasoned professionals with extensive experience in top IT environments. And we bring over 25 plus years of experience and expertise in employment law, compliances, payroll management, and vendor administration across India. And our mission is very simple. Our mission is just to simplify complex regulatory requirements so HR and business teams can focus on strategic growth. Next slide, please. So this here today will be the agenda of our meeting. First, we'll be seeing the introduction and the objective of the new labor codes. We'll be seeing what the labor codes means for us, some key highlights on the labor codes, and the likely impact of these labor codes on the IT and ITES segments majorly, and lastly, the way forward. Now, before we proceed, it's my pleasure to introduce the speaker of the day, Mr. Prashanthas, founder and CEO of Legal Bright Business Solutions. He brings over 25 plus years of experience, corporate experience in leadership roles, and he is also the panel speaker in many of the labor forums. So I'm sure his insights will provide us with more clarity on the upcoming implementation of the new labor law codes. Sir, the virtual stage is all yours.
I hope I'm audible, Rahul.
Yes, sir. Yeah.
Okay. So thank you very much, Rahul, for the quick introduction. And good morning to everyone. A warm welcome to all of you for today's webinar. In fact, we have just made this, the slides as crisp as possible for a better understanding of the audience instead of, pulling out all the line items as part of the codes. I'm sure that, this would definitely help you in terms of understanding after this webinar. Before we get into the details of the labor codes, I want to start by assuring everyone, especially the employers, there is absolutely no need to panic. Like, this labor codes has been implemented all in a sudden 21st of November, and there is a big hue and cry, right? Of course, the codes represent significant, the consolidation of existing 29 labor laws into 4 codes, and they do bring in some important changes. But in terms of, the day-to-day implementation, most of the organizations will find that these changes are manageable and are aligned to their existing practices. The only area where we can expect some practical ambiguities, which we also would be covering as part of the gray areas, is around the wage definition. That's the talk of the town today. And few of the operational aspects, especially in terms of, enhancing your internal payroll and the HRMS, the tools. Now, these areas, of course, especially from the wage definition perspective, would require some interpretation and also internal planning. And of course, once the alignments of this course are officially enforced, definitely we need to have a kind of a readiness when it comes to cost implication aspect that is as part of the financial management, which every organization need to work on. And of course, the impact for service industries, especially the BPO segments and Indian service industries, there will be huge impact in our understanding. There might be impact for the other organizations as well, but not to the extent wherever they have the higher basic which is being maintained against their fixed pay. But beyond that, there is nothing disruptive or alarming after the implementation of this. The intention of the government is to bring simplification, standardization, and ease of doing business. Let's understand how exactly the companies need to look upon on those lines. Now, once the final notifications are issued, right now it is in the draft stage for most of the states, we would have a better clarity in terms of both state and central rules, and organization will have enough time to align. So currently, for the rules to get framed, the timelines, what we have understood is about 60 days. Having said that, we do not know that, exactly after 60 days, this would get implemented. But then it would take minimum 60 days, and post which the state rules needs to be finalized and the notification has to be issued. So moving to my next slide. So what are the new labor codes and the objectives? So in a historic, the decision, I think you might have, got all this information from the social media, WhatsApp, and everywhere, this information is floating, right? The government of India has announced the implementation of four codes with effect from 21st November 2025. Now let's understand what does this mean for the employers, and I shall try to provide information as crisp as possible for better understanding of what we need to look upon, especially from the implementation perspective. Now, if you see the Code of Wages, there are four acts which has been consolidated. That is, the Equal Remuneration Act, Minimum Wages Act, Payment of Wages Act, and Payment of Bonus Act. So the takeaway, especially in this, the code is the uniformity in terms of wage definition. So the wage definition would spread across all the four codes. That would, definitely would standardize across the laws and also reduce confusion. But today, if you see from the existing labor laws, for Provident Fund, you have a different definition. For ESIC, you have a different definition. And of course, for gratuity bonus, you have a different, the threshold and definition. So this ambiguity, this particular definition of wages will overcome, and it would ensure that the standardization across the industries and across the laws. Now, for employers, how does it impact? It simplifies compliances and also reduce disputes. Importantly, it also ensures timely payment of wages and also ensure that the fairness through provisions like equal pay for equal work, regardless of the gender. Of course, we have this Equal Remuneration 1976. Again, all said or done, there is nothing new over here. It's a consolidation of the law, and there are some minor changes, cosmetic changes they have done, excepting for the cases where you have a definition changes in terms of this wage code. Now, for the ITES sector, especially, the people might be wondering how exactly this can, affect us. The compensation structures typically includes variable pay, because quite often we get the questions that does the variable pay or the performance bonuses included as part of the wages. Definitely all those things would get addressed over here, and we have provided our opinion on that aspect, what exactly would be part of wages, what can be excluded from the definition of wages. And this code also definitely helps the HR and finance teams to align policies with a clear legal framework. Now, the second important thing is the Industrial Relation Code 2020, which consolidates three acts. That is the Trade Unions Act, Industrial Employment Standing Orders, and Industrial Disputes Act. And of course, as you're all aware, all these three acts was already existing. Now they have consolidated into Industrial Relations Code. The only important aspect, what would happen from the ITAT's perspective is largely the companies would have the policies and process which has been part of their organization mandate, and this is self driven. right? And in terms of managing the employee relations smoothly, definitely this code would help. It also introduces, the standing orders. Like currently for Karnataka, the standing orders there is an exemption, but then for the companies, the provisions applicability of the provisions would be beyond 300. But what they would do in terms of, lifting this exemption is what we need to see, or from the other states also. For example, in Maharashtra, the model standing orders is a certified standing orders. And of course, don't get carried away the standing orders things. Already, this would be part of your process. So typically it talks about, the working hours, weekly of misconduct, so on and so forth, which would be part of your employee's handbook. There would be some kind of a tweaks which is required to be done from the documentation perspective. And this code also make sure that the employers, they would have more flexibility when it comes to the retrenchments due to the role redundancy, while for employees it ensures that the right representations to the departments, right? And ITATS, definitely there would be a lot of attritions, and employee engagement would be very, very critical aspect, especially in this code. So from the applicability perspective, already these acts are applicable. Again, the accepting, as I mentioned, that there are some changes which is required to be done in terms of aligning the code in your policies is where you need to really look upon. Now, the important aspect definitely would be on the Code on Social Security, which consolidates 9 acts that is to do with your provident fund, gratuity, maternity, so on and so forth. And of course, this code also extend the social security benefits for the gig workers and the platform workers. Now, how this is going to get implemented is what we need to look upon, because typically, you would have your contractors being engaged within your organization, or your employees, or your FTEs. Now, for them, definitely the extension from the employee perspective, you would be extending it. From the contractor's perspective, definitely they would be loading this cost as part of their, the invoices, and the checks next needs to be done from the principal employer. But from the FT perspective is where the companies need to look on. Of course, from the contingent workforce deployment, you already have, they get governed under the Contract Labor Act, and they also need to make all the statutory provisions. The only important thing here is the principal employer obligation would get increased for the organization, right? So in net net, if you see the cost of the social security for the employees from the provident fund perspective, or the gratuity, would get increased drastically wherever you have the lesser basic. Like for example, some of the service industries, in our experience, they maintain 25% of basic, and rest all from the other allowances aspect. Now, for them, definitely this is going to have a major impact when it comes to the social security remittance, or probably in terms of having the gratuity settlements. Having said that, from the maternity and the retrenchment compensation aspect, you would have a lesser, the impact to the organization. So the other important aspect is the occupational safety, health, and working condition. Of course, this consolidates about 13 acts, and this was more to do, traditionally it was more to do with the factories and the wherever the physical workplaces. But the definition of the industry also extends to ITES. So typically it emphasizes safe working conditions, working hours, and welfare facilities. Of course, some of these pointers has already been called out in the Shops and Establishments Act, and of course, this has also been called out in the Contract Labor Act. Again, this consolidation means this needs to be made sure that as part of the policy, this needs to be called out. And bigger industries, definitely they would go for a certification when it comes to ISO 27001, ISO 14001, 18001. In such cases, they would make this aspect as part of their policy and ensure that this has been monitored. But something to do in terms of aligning the processes and the policies is the organization need to look on, just to make sure that this has not been missed out. So to summarize, the 4 codes aim to simplify the compliance, and they protect the employee rights, and promote ease of doing business for the employers, especially for the IT/ITES industry. They bring clarity in wage structures and employee relations, and of course, from the social security contribution perspective. So net net, if you see, it's a balanced framework for sustainable growth in our sector. So moving to my next slide. So what are the objectives of the new labor codes? So typically it talks about amalgamation and simplification, ease of compliance, digitization, and employer and employer equal footing. So I'll just touch upon quickly on this. What does this means to both the employer as well as the employees? So one of the biggest changes in the amalgamation of the four comprehensive codes is the aim to remove the overlaps, like the wage definition which I mentioned, in terms of the administrative burdens, and instead of navigating multiple acts, like today for any company, typically about for ITATS about 18 to 20 acts would be applicable. Now that consolidation has happened, especially when it comes to the definitions and all, it would help us. And of course, from the social security, industrial relation, and OSHA standards, it is unified. So what does it mean? This creates a simplicity. In a simple terms, it provides a better clarity and faster interpretation, right? Because many of the times, when we are providing services for our customers, the HR or finance folks, they often call and say, what needs to be, what is the wages which is required to be calculated for ESIC, Provident Fund. So this, you can get away with that. Now, the second important thing is from the ease of doing business, especially, the labor codes of the current India, whichever it's been notified. It provides a standard definition across all the codes, right? And uniformity in compliance returns. Like already, the draft rules are there. So what exactly the uniformity in terms of the returns they are going to bring, that we would get to know only after the state provides the rules. And we are also kind of a wait and watch kind of a thing we are doing right now, because many of the states, they already have an online process, right? So how exactly that is going to get changed is what we are also looking. And of course, organization can focus more on productivity expansion rather than procedural, the requirements, because typically HR and finance function, they would have a strategic roles in their organization. They can work on that towards that, and the rest all can be managed by the service providers, and they can advise accordingly whenever such changes happens. Now, what does this digitization would bring in? As I mentioned, this would bring in transparency, but to what extent is what we are looking today? Because many of the states, again, from the registers and records perspective, ITITS companies, they manage this online, maintain this registers and records online. What is the new thing it is going to be brought up is what we are also looking, and whether this is going to be uniform when it comes to the maintenance of registers. Again, that is one more thing, because the state needs to take a call on that, because today in Karnataka, we are maintaining a consolidated register under Form T, whereas in Maharashtra, Form 2, some kind of Form 2. Whether this is going to get changed to Form I or Form 2 is what we are also looking. If that happens, then it is going to be definitely an easy aspect for the organization wherever they have a multi-location presence. Now, what does this employee equal footing means? So the code attempts to bring balance and the fairness into the employee and employer relationship. So typically the wages thing, what we spoke, and of course employer rights and employer responsibilities are clearly defined, and there is a resolution mechanism is also streamlined. But again, from the grievance mechanism perspective, how exactly that needs to be managed within the internal process of the organization is what we need to look upon. Moving to my next slide. So the key highlights. So we have about a couple of slides on the key highlights. Just for in summary, we wanted to cover up so that you have a better understanding. So the common definition of the term wages across all the codes. Again, we discussed on this. So earlier, every law had its own definition, and that was causing confusion in calculating provident fund bonus, gratuity, and other benefits. The new common definition brings consistency and uniformity across all the codes. So how does it impact to the organization? This is very important because the codes, already we have four codes, but impact is very important for the organization, for them to understand how exactly they need to plan their budgeting aspect. Now, any allowance exceeding 50% of the total remuneration depend based on the wage definition, now would be added back. So which means, as I mentioned, gave an example that service industries typically, when they have about 25%, 30% of their basic pay and rest or the other allowances, definitely they would have a bigger impact when it comes to social security contribution, provident fund, like provident fund, gratuity, so on and so forth. And of course, what employers need to do is they need to have an impact analysis to be done based on the current structure and arrive at what exactly the incremental the cost which they are going to incur once the once you are going to make this implemented from the system perspective. Now, there is a new definition for the second important aspect is the code also redefine the definition of employee and worker. We have not seen much of a difference over here because the definition of an employee means whatever as per the code definition is unskilled, semi-skilled, skilled, highly skilled. All those people would fall under the the employee definition, but the worker definition in our understanding, wherever you have a blue collar worker, maybe it can be people who are drawing lesser wages might fall under that category. But in today's situation, in today's scenario, definitely the numbers, whatever they have been providing, like for example, if you see the Industrial Disputes Act, when they were framed in 1947, the definition of wages for the supervisor is 1,600 rupees, and today 1,600 rupees, per day, you would not even get an unskilled category in the metro cities. So the 18,000 also, I'm not sure to what extent they have keeping that point as 18,000 for the worker category, but this would not get affected for the IT/ITES segment. Now, very important aspect is the introduction of the floor wages instead of the minimum wages, which has been issued by the state governments time and again. Because some of the states, you have a half yearly revision, some of the states you have an annual revision. Now, the courts would replace the concept of minimum wages with national floor wages set by the central government. So, which means what? No state can set minimum wages below the national floor wage, the threshold. So, which brings uniformity and also reduces the wage disparities. Now, again, now, for Karnataka, there is a different minimum wages. Or Delhi, there is a different minimum wages. Whether that is going to become the same is only that once we get the notification is what we need to see. However, having said that, from the impact analysis perspective, you also need to do that cost implication budgeting for the contract staff also, because you might have, the contingent workforce or integrated facility management working within your organization. Definitely the cost would get increased when the payout happens. So from the facilities team or, the workplace team and all, they need to really think through on this and also make sure that this has been factored as part of their annual budgeting. Now, very important thing is, the impact on the employee's on-hand salary, right? That is in-hand salary. Uh, because of the wage definition changes, there is a structural changes in case if the basic would get increased to 50% from 25% to 30%. And because of the standardization, and because of the higher social security contribution on the provident fund, the net pays of the employees would get decreased. So again, this is applicable for your employees as well as your third party vendors. Now, the moment the net pay would get decreases, how exactly this needs to be managed from the organization perspective is what the organization need to think. Do you have to maintain and protect the net pays, or the overall CTC is safe, or you take a chance how exactly this needs to be managed, or there is a communication which is required to be sent to the employees for the affected people. So I think this is a very, very sensitive thing which the organization really need to look on. And of course, from the payment of wages perspective, all the payouts has to happen on or before 7. So the earlier, the timelines which was provided up to 10th would no longer would be there, because even for the contract staffs, it becomes they have to make the payment on the 7th itself. And the other important point is from the settlement perspective, there's a major operational change is what we feel. So when an employee resigns or terminated, his settlement has to happen within 2 working days. So F&F has to happen within 2 working days. Definitely, this is a major impact on the IT/ITES segment because of the dynamic, the employee deployments, and also from the payrolling perspective. because most of the companies, they have 30 days, 45 days kind of a window period for them, for make sure that, all the employees would return assets, and also from the tax perspective, calculation and other things. But this would have a major impact where you have a large scale and multi-location presence. And very importantly, the principal employer liability from the contractual obligation has increased, because uh, in case if you deploy any third-party vendors, your accountability increases. Although earlier it was there, but now that needs to be looked on, especially from the contractor's perspective. Audit needs to be carried out on a monthly basis, just to make sure that so the the all this compliance has been managed by these people, and to avoid any kind of an exposure when it comes to penalties. Because typically what happens is, there are service providers, the big time service providers, who say that we are compliant and all, but internal teams might not have the bandwidth to manage that. We have seen in our experience that many of the cases that the vendors would default. They might give some kind of a declaration, but that is not enough to whenever there is a dispute arises with the department, or probably during the internal audit, we would not have any defense on that. So moving to my next slide. So the code on, the highlights on the code on social security is, all the employees, the organized or unorganized or any other sectors would get covered. So which means, as I mentioned, that the gig workers and the platform workers would get covered under this provisions. So meaning the wider coverage of provident fund, gratuity and other benefits. There is an increased employer cost, right? There's an increased employer cost, and of course from the companies need to be clear from the engagement models, especially when they're onboarding the employees. So that said, the budgeting is requirement is needs to be done, because there's a huge cost impact when it comes to the provident fund payouts or the gratuity payouts. So that cost impact analysis needs to be done in that front. They have also, this code allows the voluntary enrollment of the EPF and ESIC registration. So which means the organization can extend the social security even if the threshold limit is less. Like for example, today we are talking about 10 and 20 kind of a thing for getting a registration. The organization can get the registration done and extend this benefits for their employees. Now again, PF, ESI, maternity, which we already covered, needs to be paid on the new definition. The one important thing is the limitation period is introduced for 5 years for the Provident Fund. Already we have this for the ESIC. Now the code introduces this 5-year limitation period, just to make sure that we have a greater clarity. That means organization would have a clarity, and also reduced open-ended exposure. Like for example, something to do with non-compliances way back in 10 years, that exposures can be avoided, and going forward all those the shortfalls, whatever it has been identified, that can be taken care of. So which means what, the code also, it's a pro employer kind of a thing. Now yes, I see, in the section 40 it talks about in the 5 year thing. The same thing for the PF, it's been extended, because many of the companies, if you see, there might be issues with respect to EPS, non-EPS corrections, or there might have some short fall payouts, especially when it comes to the provident fund contributions and other things. Now, the other important aspect is the gratuity has been made for the fixed term, and there would not be any condition for the minimum service period. So which means, again, this is a cost for the company, and even for a short term or a project based employees who work for the organization, they earn the gratuity. Now, current PF scheme, what we understand is would continue for 1 year, but however, we are just waiting for the notifications to come up on those lines. Now, the important aspect from the penal provisions perspective is the new code also introduces significant higher penalties for non-compliances, which means there will be heavier monetary penalties, stricter prosecution, the standards, and of course, for repeat offenses, it would attract higher penalties. So if you see the Shops Act or a Contract Labor Act or any other minimum wages act and all, you can see that the penalty is as low as rupees 100, but now that has been increased drastically, and especially in the social security code, that's been increased, and companies need to really look upon that. So the conclusion, Arish, if you can just come back to the previous slide. So the conclusion is the social security expands to all segments of the employees, including your gig workers, platform workers, in terms of bringing discipline from the employers wherever they are, avoiding any kind of the provident fund payouts or the gratuity payouts. And of course, this means it's a direct impact on the organization, which the companies need to take that hit. And from the budgeting and the policy changes perspective, definitely the companies need to look on. Moving to my next slide. So the fixed term employment, as I mentioned, that it is allowed for a shorter period or probably a 1 year or 2 year kind of a thing. They would also get entitled for all kind of benefits, statutory benefits as a regular employee. And of course, there's a gratuity payable on a prorated service upon completion of it. There is a lot of questions which has been coming up for the regular employees from the organization. Do we have to settle the gratuity for 1 year? So of course, we are also waiting. In our understanding, it should not be, but we are just waiting for the final notifications to come. And let's see if they want to bring in the uniformity, especially for FTEs and the people who work for 1 year, then definitely that's a welcoming the note for the employees. But then again, for the employers, it might hit their budgets, or the cost implication would be high for in terms of having their accruals. The standing orders, definitely, as I mentioned, that 300 plus the applicability. We are just waiting for the let's wait for the final notification to come up, so that we will understand the exemption aspect, as well as from how exactly the implementation they would do for the organizations. From the contract labor perspective, very important thing. The applicability, they have increased to 50. Of course, again, there is an ambiguity over here. Currently in Maharashtra, it is already 50, whereas in Karnataka, it is 20, whereas in Tamil Nadu, it is 20, whereas in Telangana, it is 5. But if they maintain this 50, definitely this is going to have a major impact to the department. So again, let's wait and watch what exactly the state rules would do. But till such time, I think the organization need to continue the current process. And of course, contractor engaging contract workers for more than one state can obtain common license. I'm sure that, definitely the state governments would not allow this, because this is a revenue for them, both directly and indirectly. And I'm sure that, an independent contractor obtaining license pan India would have an effect. So let's again wait and see how exactly they plan to have this, the notification issued. And engagement of contractor in core activities prohibited. This they have been talking, from the Contract Labor Act perspective. However, from the ITES perspective, definitely this is a practical challenge, because some of the product companies, they outsource their activities to the third party, the technology vendors. So again, this is an ambiguity how exactly this needs to be dealt upon. Now, the general points which we have covered over here is a couple of points we have covered. There's a free health checkup aspect once a year by the employer for workers, for more than certain age. So whether they are going to extend this to the ITES segment is what we need to see based on the notification they issue. But I'm sure that this would definitely would be there in the manufacturing segment and other factory setups, wherein they work in they get exposed to various aspects, chemicals and other things. So in our understanding, this might be more applicable to them than ITES segment. And of course, to appoint the welfare officer if more than 20 or 250 workers employed. And today also we have that. Whenever you employ for your organization, when infrastructure changes happens within your organization, and you get registered under the BOCW, that is Building and Other Construction Workers Act, you need to have a safety officer, welfare officer kind of a thing. So it's a good to have kind of a thing, to have this kind of a setups. Bigger organizations, they might have an in-house the doctors, the in-house, the setups which has been there. But let's wait and see how exactly this imply for companies where they have, less than 250 or about 500 kind of a thing, especially in the IT/ITES segments. Moving to my next slide. So, what is the impact? Typically, we have listed down around the four aspects. We discussed on this, right? Because of the wage definition, you might have a lot of implication on the cost. So there is a financial impact for sure. There is also an operational impact to the organization. I'll cover on that. And also the people impact, how exactly the impact would happen for the employees, and what exactly it means to the compliance impact. Now, from the financial impact perspective, uh, your payroll cost or the benefit cost and the cash flow planning, definitely it would get increased because companies need to work on this, considering the cost implication, especially when there are implication with respect to provident fund, monthly provident fund payouts, or probably the gratuity payout. So which means what? The higher basic wages means higher provident fund, the higher gratuity, higher bonus, and of course, leave encashment also would get increased, because earlier leave encashment, used to make on the total fixed gross, but now maternity and the leave encashment would be calculated on the wages, whatever as per the new definition. So for employees, it means there's an increased long-term benefit, but definitely this is a hit for the employers because conventionally, many of the industry they follow with the lesser the base wages and the higher other allowances component. So we covered that point, and from the operational impact perspective, there are changes which is required to be done, especially from the payrolling, the payroll, your HRMS tool or the payroll compliance, something to do like that, because you will see changes in the wage structuring, and also there is a standardized definitions which has been defined, which will have an impact on the take-home salary. So the cost to the company planning, the payroll systems, the readiness and the record keeping needs to be done, and also the changeover in your technology aspect in terms of having this being implemented in your systems is required. Additionally, what other thing can happen from the workforce practices is, like for example, the working hours, they're saying 8 hours to 12 hours and all. I mean, of course, ITES, you work in a different time zones, dynamic time requirements and all. So those things, there is no need to get confused on that. So you can continue with the aspect right now, what exactly it's been managed right now. But we also need to look upon not only for the employees, but also from the contractuals staffs also, whatever the changes which is required to be done as part of this requirement. Now, from the people impact perspective, there would be a drop in the net pay. There would be increased in the retirement benefit, right? I mean, the take-home pay, the moment it gets reduced, automatically the employers would come and, they would talk to the HR finance. And typically, HR is a front-ending role over there, right? And the variable allowances, how exactly you need, in case if you have a variable component or a performance bonus, how exactly you need to manage this in terms of restructuring, just to make sure to avoid any kind of an ambiguity when the net pays go down. Or is that company is going to take a call that, since the CTC is going to remain same, we are going to take a call in terms of managing this CTC irrespective of the net pays are down, because this net pays typically is down because of the lower basic wages. But having said that, the employee indirectly would get benefited to the extent of whatever the net pay goes down. To that extent, provident fund contribution would be there as part of the remittance. So that communication, the readiness is required to be done from the organization perspective. Now, how does it impact from the compliances aspect? So we have an ease of compliances, right? We single registration, single licensing, and unified returns. This is the theoretical thing what we have got, but when it comes to operational aspect, when the state government issues the notification, only we would get to know what exactly this means. Because if they say that particular registers as part of the central notification, if it is same all across, then definitely this is going to be ease of doing business. But if the state government say that we would like to continue with the process what we have, or if in some of the cases, like the central rules would be the state rules, if they give like that, it would be easy. Otherwise, this aspect of, in terms of managing this registers, returns, and other things would be the same, right? What we are doing right now. So moving to our next slide. So we have just listed down the ambiguities and the gray areas, especially for planning. I mean, of course, this would have been running in your back of your mind. Uh, the scope of the total remuneration for the wage definition, this is required to be really looked upon. The treatment of specific, in terms of allowances, because ITES segments, you have a special allowances, like, whereas in manufacturing segment they might not have. So how exactly this would have an impact is what we need to see. And also there would be a state specific rules, like I've been mentioning that one, how exactly this can affect, in terms of maintenance of registers, records, or any other aspect when the state government releases their notification. Now, the exact go live timelines is also need to, because we do not have right now what are the timelines, although we have received some kind of a communication it is going to happen next 60 days. But there would be definitely transitional times, because organization would have different composition appraisal cycle and all. Let's say, for example, in the MNCs and all, they might have November to October kind of a cycle, whereas Indian companies, they might have a April to March kind of a cycle. So how exactly that needs to be managed is where something the organization need to look upon. Or if this changes, if they wanted to implement it as part of the comp revision, they need to really plan accordingly, because there are various other aspects in terms of having this wages needs to be managed, or the net pays needs to be managed. So those aspects and all needs to be looked upon. The practical challenges and around the standardization of standing orders, of course this might have more to do with the factory setups. But for ITATS, let's look on the notification, because currently I don't think they would make a major change, especially in the standing orders. They might not lift the exemption, they might continue with that. And some of the states, like for example Tamil Nadu and all, they don't even go to the ITATS when it comes to standing orders. But Maharashtra, as I mentioned, that the draft standing orders will be certified standing orders. Now, from the implementation challenges, what we foresee from the employer and employees, um, it's a realignment of the HR policies, right? I mean, your policies needs to be tweaked, and statutory templates needs to be worked on, especially from the appointment orders. Now that we already been communicating to various companies that what they asked the question, what do we do at this point of time? So we say that you can kind of and have a clause in your appointment orders that in case if there are changes which is going to happen as part of these changes when it comes to wage structure, you can have a kind of a rider over there, so that the employee would not get confused when you make those changes, especially for the new employees. And ensuring the contractors and vendor ecosystem should align with your new requirements. It's not for the organization, the employers, it's not for the employees, but also the third party vendors whom you engage, for in your organization. It can be contingent workforce or integrated facility management, gardening, security, maintenance, so on and so forth. And of course, managing employees expectation, as I covered that, especially when it comes to the compensation changes. And internally, definitely the finance and HR team would have a challenge, especially in terms of upgrading the HRMS and payroll system based on the changes which the system is going to bring. And we feel that there is an additional workload on the HR and finance manager, especially during the transition period, because although this might take about 60 days, 90 days, or probably a quarter. And net, what we now understand, this might go to February, March also. But then, when it comes to the readiness, especially in terms of implementation, the HR and finance team would have definitely a challenge in managing this transition. So what we say from the recommended approach to this particular ambiguities and the gray areas is, like I covered in my previous slide, that financial modeling and the cost impact analysis needs to be done, so that the organization is well equipped, and also you can project this to your leadership teams, stating that this can, you can have a probable impact on this particular aspect, right, from the cost perspective. Even if it is, let's say, for example, if you're already maintaining 40% of base pay, the 10% definitely it's going to become a huge impact if you have more than 500,000 kind of a thing. But in case of a bigger organizations, like for example, if they employ more than 10,000, 20,000 kind of a thing, and if they have base pay is 25, 30%, definitely that is going to have a major impact. And also from the in terms of aligning your SOPs, policies, HRMS systems readiness, and also contractors compliances kind of a thing, all these things needs to be looked upon. So this is what we have today for this, the webinar, we try to cover as much as possible in a crisper way for better understanding. What we thought is, when we prepared this presentation, typically, we have seen many webinars that, there is a detailing out of all the line items as if it is a new line item. But in our understanding, it is not new line items because, as I mentioned, that 18 to 20 Act, which is already applicable for you, this is already embedded in that. So it's an extension of that, and there are certain changes which they have brought in over there. And we try to kind of summarize this in a crisper aspect so that you can have a better understanding. So that ends my the presentation. So maybe I think over to you, Rahul.
Sir, thank you very much, sir, for this clear and insightful presentation. I mean, personally, I really appreciate the way you laid out everything in such a simple manner because sometimes they can be a little complex to understand. So I'm sure that this actually gave people a better understanding on the topic. So thank you, sir. And so now moving forward to our most awaited FAQ session. Sir, so based on the numerous queries we had received, our team has prepared a set of questions for you related to the new labor codes. I'll just be going through them one by one for everyone's benefit. So if I may. Yes, sir.
Please go ahead.
Okay, sir. So the first question to you is the most burning question in everyone's mind. When will the labor codes be implemented?
So I think I covered that. So I've also given the information that, this is every organization wants to know because the implementation date has already been notified. But the state as well as the central rules are need to get fully aligned and to be published. So as of now, we expect this to happen. It may take a quarter. So that's what, our expectation is. And it would not happen on one day because each state will have to have the notification being defined, approved, and the same has to be notified. So we expect this to happen in a phased rollout. So we have a time actually in the sense in terms of having this implemented, but there is no confirmed date as of now because the central has also not communicated or given a mandate that from this date you have to implement to any of the state governments.
Okay. Sir, so my next question to you is on behalf of all the employees over here and on behalf of all the employees that just reached out to us. So will the employees take home salary reduce after the implementation of the labor codes?
Yeah, of course. I think this also are covered. So depending upon the base salary, what they have right now, let's say, as I mentioned that, I gave an example of 25%, 30% kind of a structure. In those cases, definitely there would be a reduction, and also there is an incremental impact to the employers. So the organizations, like for example, today, if you see the contract employees deployment, typically they pay on the minimum wages or the wages they have been defined as per the requirement. Now, as long as if this has not been maintained 50%, definitely they would have some kind of a reduction. And I'm sure that, in our experience, the bigger companies in India will have a huge impact. Bigger companies, especially if they have 50,000 plus, 1 lakh plus and all, they will have a huge impact. And wherever the MNCs or a global capability center product companies, by default, they maintain 45%, 50% kind of thing, they might not see much of a reduction.
Okay, so since you mentioned the companies, so on behalf of all the companies, what should the companies do right now?
So, in my recommended approach, as I mentioned, that the companies need to really work on the internal impact analysis, especially from the cost aspect, both from the direct employees as well as from the contractual staff as well. And of course, from the readiness perspective, the HR team also need to get prepared in terms of tweaking up their policies, process, and other things. But before that, very important aspect is the cost analysis needs to be done from the implication perspective because right now there is no full implementations, and of course the final we are waiting for the final notification. So before that, I think we can keep this ready. Also communicate to your leadership teams so that they are also aware, your CFOs of the companies or say CXOs, you can communicate them. This may be a probable impact in case of such changes is going to happen, especially from the wages perspective.
Okay, sir. Sir, in your opinion, will the gratuity rules be changing under the implementation of this new labor codes?
Uh, it can happen in two stages. Like as I mentioned, that in case if the wages, if it gets increased, definitely there will be a proportionate increase in the gratuity also. However, for the fixed term contract also we discussed that it would be paid on a pro rata basis. It's not that 5 years is something they are looking. But again, the other important aspect is organizations also wanted to know whether the gratuity would be payable for the employees who completed 1 year, because there are many organizations have approached us, and their employees are already asking on the gratuity payouts for the people who are done the 1 year. I mean, they have resigned, so we might have to wait for this notification to come up. Harish, maybe some couple of questions you can pick up from the chat box also, important thing, so we can answer that as well.
Sure, sure.
So moving on to my next question. In your opinion, what do you think would happen to the contract laborers? Because that's a very important aspect from the company perspective.
So in fact, I covered this point because right now the threshold is different for different states. The code has given 50. As I mentioned, quite frankly, there would be an impact to the government in case if they make 50 directly and indirectly. So I'm not sure that, they are going to make 50. If they make 50, that's going to be really good for all the organizations. And yes, of course, in case if they make one license for across Pan India, then that is also a very good move. But it might not happen. It's what we are seeing, because we are also been discussing with the state government, the team, how exactly they're going to plan on this, and they don't have any such idea of implementing such kind of a thing. But let's wait and watch. If it happens, it's really good.
Sir, based on your insights and based on your understanding on the new labor codes, what do you think is the biggest change under all these codes?
Uh, I think it's a definition of the wage, because that is creating more ambiguity to every organization, and that is the talk of the town, where you have a more implication from the employer cost perspective. There is an implication to the employers also. So that's the only thing I see. The wage definition is where we need to look upon. Otherwise, it's not, as I mentioned in previously, you need not have to panic on this particular aspect.
So, uh, do you think that these new labor codes will increase the cost of the employees?
No, it will increase the employer cost would increase in terms of the provident fund, gratuity, other things, because that is a significant move would happen when the base wages gets changed.
So, sir, would you recommend all the establishments to re-register, or how would that work, sir?
Right now, to continue with the existing process till the notification comes from the state governments as well as the central government. Let us understand how exactly they are planning, because especially ITES segment, they have a multi-location presence. Like someone I saw in the chat box, what would happen to the national festival holidays? Again, today, if you see that, each state has got its own numbers. Some state has got 10, 8, 9. So this kind of like Kerala, you have about 12 to 13. How exactly this needs to be managed is what we need to look upon. Currently, you can follow the process. There are certain bigger industries, they take a call to manage uniformity irrespective of the numbers. Let's say, for example, in Karnataka, they have a presence and they provide 10 days, but in Pune, they have about 8 days or 9 days. They still maintain 10 days. Whereas in Kerala, they still maintain 10 days. So though there are companies, bigger companies, I'm saying, I don't want to name, bigger companies, they made, but some of the companies, product companies, MNCs, GCCs and all, they follow the state rules also. So whether this is wrong, that is right, I'm not here to to tell that. But of course, I'm saying the current the process what it has been. I mean, let's wait for that particular notification to come up. And of course, this is there in our radar also, because in fact, we had represented to the Labor Secretary Central as well as state, especially on the leave provisions, whether it is in your EL leave provisions or SL leave provisions or NFH leaves, to be made uniform all across the states where they have a multi-location presence. Because again, the those who have establishments in Karnataka, they would know that the latest notification on the menstrual leave, right? That has created a big hue and cry. Now, people are asking, what do I do? I have a location in Chennai, I have a location in Hyderabad. Do we have to extend this? So this is the ambiguity. I mean, just like that, they issue the notification, not knowing how exactly the ITITS dynamics would work. Are we done, Harish? Or any other thing we have, specific questions we need to take? Do we have more questions, Rahul?
I have one
Yes.
last question, sir, based on the last point that you mentioned. Yeah, again, like I said, based on the last point that you mentioned, do you think that all the companies should panic or rush into making changes, or what do you think should be done? What would you suggest?
There is nothing to get panicked over here because there is nothing new act they are bringing in. There is nothing new thing they are bringing in here. They are just standardizing the process. There are some uniformities they wanted to bring in, right? And that needs to be implemented. That's it. So companies, labor codes have been implemented. So what do we do? Is there a big change? There is no big change. I'm making it very simple, clear to all the audience over here. All the acts, whatever we have, that has been consolidated. There are certain additional line items which they have included. There are certain additional definitions they have included. So it is nothing new. So Workman Compensation Act already was there. Industrial Disputes Act, standing orders, Provident Fund, everything it is there. So it's a consolidation they have done. So no need to panic on that. However, having said that, we only have to work on the readiness because each company will have a different time zones or time frames for their appraisal composition cycle to have this implemented. Let's say, for example, the notification comes on 1st of January, whereas your composition would happen 1st of April, but you have a large chunk of people, let's say 10,000 people. You cannot do on 1st of Jan. That's an organization call has to take. So definitely we can help this organization how exactly this can be managed.
Sir, I think I'm done from my end. Hari, sir, if there's something that you would like to address, over to you.
Yeah. So there are a couple of questions which I saw in the chat box. So one particular question which I would like to ask you, it is about though you have answered about it, it is about the FT treatment for the gratuity. How do we treat the gratuity for the FTs? So that's the one question. There's another question
I think we
about
covered FTEs aspect we covered.
yes. There's another question about the mandatory health check for the IT sector, the employees in IT sector.
I think that point also we covered. So typically it is to do with, in our understanding for the factories, but let's wait and watch for the notification to come up. Because this is again, if they are going to make it uniform or are there going to be any kind of a representation on this, we really do not know. But definitely we'll keep you updated on this particular aspect and we'll let you know the changes if it comes up.
Yeah. And there is a question around the on the FATF process because as per the new code, the FATF has to happen within 2 working days from the separation. So what is your insight on that?
Of course, as I mentioned that, typically IT industries, they take about 30 to 45 days because the employees needs to return their assets, laptops, so on and so forth. Sometimes, in terms of taking the advance from the company and all set or done. Once they submit all these things, there are internal process which is required to be done from the HR and the finance perspective. There are certain, the payroll, you have a payroll cutoffs, right? From the organization like 25 to 24, 26 to 25 kind of a thing, or 21st to 20th kind of a thing. So all those things needs to be calculated. But again, they have mandated this to, the F&F to be done on the 2 working days. We need to wait and see how exactly this can get implemented. The organization need to really put on their effort, how exactly this can happen. And of course, I see that, can we hold the gratuity, can we hold the thing and other things we have. So gratuity, we have a timeline 30 days right now, as per Section 7 of the Payment of Gratuity Act. So the 30 days ka thing, we have final settlement is something to do with your, the whatever the salary, left out salary, or probably your leave encashment, something to do that. But I'm sure that, some of these provisions they would retain because again, the taxation aspect from the finance team, they would have a major issue in terms of calculating wherever their workforce or the, the people, the leaving from the organization would be high.
I think more or less you have answered all the questions. So it is in different forms though. but the intent of those questions you have already taken up in your webinar, and you have answered it. Thank you, sir.
Thank you. In case if someone has got any questions, maybe I think Rahul, you can just address that particular thing.
Yes, yeah, in view of the time, actually, I think we have actually covered the vast majority of the questions. But if at all you all have any more further questions beyond what you have covered here, please do reach out to us at info@legalbrightllp.com. I think you can just drop it in the chat box. So please just direct all your questions over there, and we'll be happy to get back to you with further clarifications as soon as possible. Okay. I think, yeah, with that being said, we come to the end of today's webinar. A big thank you to our speaker. Thank you very much, sir, for your valuable insights, and for all of you for taking the time to join us. And we hope this session helped you understand the new labor codes better and stay prepared for the changes ahead. And on behalf of the entire team, thank you all. This is Rahul signing off. Thank you again and have a wonderful day.
Thank you, Rahul. Thank you. Thanks,
Thank
everyone.
you.